Hello students, today we are doing working capital estimation from our remedial notes. Let us start with example number 1. From the following details, prepare an estimate of the requirement of working capital. Production is 69,000 units. So in example number 1, you have to prepare working capital estimation for 69,000 units. You are given selling price per unit. Then you are given raw material 60% of selling price, direct wages 10% of selling price, and overhead 20% of selling price. Now let us first convert this percentage into absolute amounts. So raw material, you are told that it is 60% of the selling price, and selling price is rupees 5. So 60% of rupees 5, your raw material cost per unit is 3. Direct wages, you are told that direct wages are 10% of selling price. So 10% of 5, your direct wages are 0.50 per unit. And overhead. Overhead, you are told that they are 20% of rupees 5 or selling price. So overhead is rupees 1 per unit. Your total cost or total cash cost is 4.50 per unit. Your selling price is 5. So your profit will be 0.50 per unit and your selling price will be rupees 5. However, we will see that we do not require profit or selling price in the computation of working capital. I am making an estimation of working capital here only. The statement. Okay, this is a statement of working capital. The statement starts with current assets. The first current asset that we should have is stock of raw material. Okay, how do we compute the stock of raw material? So we are going to make 69,000 units for the year, right? And per unit cost of raw material is 3. So 69,000 into 3 will give us raw material consumed for whole year. Now if you read the question, you see material in hand is 2 months requirement. It means you are keeping 2 months worth of stock of raw materials in hand. So into 2 by 12. So 69,000 into 3 will give you raw material consumed for whole year. So for 2 months, how much? So into 2 by 12. So 34,500 is your stock of raw material. After stock of raw material, you need to find out stock of work in progress. Now, as the name itself suggests, this is work in progress. It means some of the work is done, some of the work is not done. Okay. So if you read the paragraph below the table in the question, see, wages and overhead are paid in the beginning of the month following, that is pertaining to current liabilities. In production, all required materials are charged in the initial stage and wages and overhead accrue evenly. This type of statements are somewhat indicators of what you need to do in work in progress. Now, what is work in progress? So basically, you have sent some raw materials to the production department, and there are some expenses like wages and overhead that have been incurred on this work in progress. That is in an attempt to convert raw materials into finished goods, but they are not converted into finished goods as of now completely. Hence, they are work in progress. Now, whenever such examples are given and no information is given, what you have to do? So work in progress, there are 3 components of work in progress: raw material, overhead, and wages, right? Now see, in the paragraph, they are saying that all required materials are charged in the initial stage. It means whatever the production process requires, all raw material, that is 100% of the raw material have been supplied. but we don't know how much work, overhead and wages have done. Now, since it is work in progress, it means some of the work is done, some of the work is incomplete. So when no information is given, we will assume that wages and overhead are 50% complete, which also means that they are 50% incomplete. And production is 100% complete with respect to raw material. Now, how do we find out value of this work in progress? So work in progress will be raw material 69,000 units. Raw material cost is 3 per unit. Now see what is the time for work in progress. If you see in the question, you are given production time. Production time is 1 month. So production time 1 by 12. And for raw material, you have to take 100% complete. It means raw material is 100% complete. So raw material in work in progress is of 17,250. Direct wages. So you are making 69,000 units. Wages per unit is 0.50. Work in progress time, that is the time taken to convert raw material into finished goods, is 1 month. But since the work is incomplete and we don't know how much of it is complete or how much of it is incomplete, we generally assume that work is 50% complete and 50% incomplete. Now overhead 69,000 units you have to produce. Overhead per unit is rupees 1 into 1 by 12 is the production time, and this is also work half done, half not done, so 50%. 2875. So these three components, raw material, wages and overhead, make up for work in progress, and the total 21562.5. This is a valuation of work in progress. C, finished goods. Now you are making 69,000 units. Cost of making per unit is 4.50. You just have to take cost because finished goods will be valued at total cost 4.50. And see in the question, finished goods in store live for 3 months. So 69,000 into 4.5 will give you cost of goods sold for whole year. For finished goods, they are in store for 3 months. So for 3 months, how much? So into 3 by 12. So 69,000 into 4.5 into 3 by 12. 77,625. Next current asset is debtors. So you are going to produce and sell 69,000 units. Now, generally, we think that debtors should be valued at selling price. But it is not the case in this question, because here what we are saying is what is our investment in working capital in selling these goods on credit to debtors, right? So if you see this question, your investment or your expense per unit is 4.50 and not 5. You will realize 5 rupees later, okay? But what is your investment in this? It is 4.50. So what we do is we value debtors at total cost 4.50 and see in question credit allowed to customers. Customers are our debtors. It is also 3 months. So debtors will also be 77,625. And the last current asset is cash. Cash balance given to you is 20,000. So if you make a total of all of this, you will get total current asset. This is also called as gross working capital. Let us call this as A. The total is 2,31,312.5. Total current assets or gross working capital. Now part B of this question, where we find out current liabilities. In current liabilities, the first one is creditors. Creditors. Now we are going to make 69,000 units. Now what do we buy from creditors? So we buy raw materials from creditor, and raw material per unit is rupees 3. So 69,000 into 3. And see the question, credit for material. That is, our suppliers allow us credit of 2 months. Okay. So we are buying 69,000 into 3. That is the cost of raw material that we are buying for the whole year. So for 2 months, how much? So into 2 by 12. So 34,500 worth of creditors are outstanding. B. Now see the paragraph below the table. Wages and overhead are paid in the beginning of month following. Okay. So let me just show you here. Wages. Okay. Let us say this is December going on and the next month is January. So wages of December will be paid in January, right? So at the end of December, that is on 31st December, 1 month's wages will be outstanding. So all the time at the end of every month in your balance sheet, your current liability will show wages outstanding, which will be equal to 1 month's wages. So outstanding wages, you are making 69,000 units. You are having wages per unit of 0.50 or 50 paise, and wages outstanding will be 1 by 2, that is 1 month's wages, because you are paying in the next month. So 69,000 into 0.5 into 1 by 12. So 2875 will be wages outstanding at the end of every month. Similarly, outstanding overhead. Overhead are other expenses like say fuel, power, and all those things. They are also paid in the next month. So they are always paid 1 month after, and at all the times 1 month's overhead will be outstanding in your balance sheet. So overhead is rupees 1 per unit and outstanding time is 1 month. So this will be 5750. So these are all the current liabilities. So make a total, you will get total current liabilities. Let us call it as B. It is 43125. Now subtract current assets and current liabilities from current assets. What you will get is net working capital, A minus B. Net working capital will be 1,88,187.5. And see the last sentence now. Add 10% to your computed figure as contingency. Now this is the net working capital, current asset minus current liability. But there can be some unforeseen events in the business, and for that you need to keep some amount as contingency. Here they have specified that you need to keep 10%. $18,818.75. Add these two amounts and you will get the final answer, which is called as working capital required is 2,07,006.25. This is your example number 1, which is very basic example. Now let us go to example number 2. Example number 2, CAT Limited. Now see this example. CAT Limited, which is to commence its operation on 1st April 2024, proposes to produce 36,000 completed units during the year. So you have to prepare a working capital estimation of 36,000 units. The following information is supplied. Unit cost structure of a product at 36,000 units. So you are given raw material rupees 4. You are given wages rupees 2. You are given variable overhead rupees 2, and you are given fixed overhead. Now see, including depreciation of 0.50 and total is 1.50. But what you have to do here is you have to take fixed overhead or any overhead excluding depreciation. Now what we are trying to do here is we are trying to find out cash cost of doing these operations, right? And for doing this cash cost, what you have to do is you don't have to take depreciation into account. So your total cash cost, let me write total cash cost, since we have excluded depreciation, which is a non-cash item, okay, it will be 9 rupees per unit. We don't require profit and selling price for computing these examples. Now see, in example you are given after the table stock of raw material 1 month, work in progress 1 month, completed units, material supplied fully but 50% converted. It means in work in progress you have to take raw material 100%, direct wages 50%, and all other overhead also 50%, right? Then what you are given, okay, let me just write down. Raw material is 1 month, finished goods is 1 month completed units, credit period allowed to debtors is 2 months, so debtors is 2 months, and credit and allowed by creditors is 3 months, so creditors is 3 months. Lag in payment of wages and overhead 1 month, so direct wages and overhead 1 month lag, that is you pay after 1 month, so for 1 month they remain outstanding, right? Credit sales 80%, credit sales is related to debtors, so 80% credit, and cash purchase is 20%. If you purchase 20% on cash, it means 80% is credit. Okay, so it's the same ratio, 20% cash, 80% credit for both debtors and creditors. Cash on hand you are given 50,000 and contingency 10%. This is the information that you are given in the example. Now you need to find out working capital for this firm. Let us make a statement, right? We will start with A, current assets. In the current asset, first current asset we will have is raw material. Raw material, so you are going to make 36,000 units. Per unit raw material is 4 per unit, and raw material time is 1 month. So 1 by 12, So you will have a stock of raw material of 12,000 units. Second is work in progress. Now work in progress has three components. First is raw material. So you are going to make 36,000 units. Per unit raw material is 4. Now see time for work in progress. You are given work in progress 1 month. Work in progress also 1 month. So it is 1 by 12. And raw material is 100% complete. This is given in additional information. So raw material in working progress, that is investment in raw material, which is a part of work in progress, will be 12,000. Second component of work in progress will be direct wages, because on this raw material labor will work. So 36,000 into wages per unit is 2, work in progress time is 12, so 1 by 12. And in this question you are directly given that work in progress is 50% complete. It means labor and overheads, they are 50% complete. So 36,000 into 2 by 12 into 50%. So 3,000 on labor, variable overhead 36,000 units. Per unit variable overhead is 2 per unit. Work in progress is 1 by 12 and the work is 50% complete. So the variable overhead will also be 3,000 rupees and fixed overhead 36,000 units you are making. Per unit fixed overhead is 1 excluding depreciation. Work in progress time is 1 by 12 and this is also 50% complete. So this should be 1,500. So total is 19,500 for work in progress. So raw material, work in progress, now finished goods. So you are making 36,000 units. Per unit total cost of making a finished good is rupees 9. We are only taking cash cost of making finished goods because that represents our investment in working capital, and finished goods in stock is for 1 month. So 1 by 12. So 36,000 into 9 by 12, 27,000 is the value of stock of work in progress or your investment in work in progress. Now debtors. So you are making and selling 36,000 units, but in this question you are given that 80% of the goods are sold on credit. So out of this 36,000, only 80% or 0.8 are sold on credit. Per unit investment or total cost is 9 because your investment in selling these goods is only 9 and not the selling price. And credit allowed to debtors is 2 months. So your money will be stuck for 2 months. So 36,000 into 0.8 will give you the units of credit sale. Into 9 will give you the amount that you have invested for debtors throughout the year. But this amount is recoverable in 2 months. So your money gets blocked up only for 2 months. So into 2 by 12. So your investment in debtors at any given point of time is 43,200. Right? You are given cash. Cash is 50,000. So these are the current assets that you are given. If you make a total, you will get total current assets A. $1,51,700. Now part B, current liabilities. In current liabilities, the first one is creditors, from whom you buy raw materials on credit. So you are going to buy 36,000 units of raw material. But see, creditors are also giving you only 80% on credit. Rest you have to buy on cash, multiplied by per unit raw material. Since you are buying raw material from creditors, and creditors are allowing you time of 3 months. So into 3 by 12. So 36,000 into 80% will give you 28,800, which is your number of units that you buy on credit from creditors. Into 4 will give you total cost of raw material that you buy on credit. Into 3 by 12 will give you amount outstanding. So amount outstanding is 28,800. Then outstanding expenses. So you are told that wages is outstanding for 1 month. So outstanding wages, 36,000 units you are making. Per unit wage is 2. So which gives you 36,000 into 2. Total wages for the whole year is 72,000. 36,000 into 2. Outstanding is 1 month. So into 1 by 12. So 72,000 into 1 by 12. 6,000 is the wages outstanding. Variable overhead outstanding, 36,000 is the number of units. Per unit variable overhead is 2 into overhead outstanding is also 1. Overhead outstanding is also for 1 month. So 1 by 12. So variable overhead outstanding is also 6,000. And fixed overhead, 36,000 into 1, which is total fixed overhead for whole year. And outstanding is for 1 month. So into 1 by 12, 3,000. Make a total. You will get total current liabilities B. Net working capital. You are also asked to keep 10% as contingency. So add 10%. Your working capital required is 1186